Good evening, everyone. Welcome to the session. Am I clearly audible to all of you? Okay, Reshma. Fine. Let's wait for some time. Let others also join, then we'll begin the session. In the meantime, you can just share your queries. Any of the doubt, any question from the previous session? Okay, fine. So anybody can give an idea about what we have discussed, only the key points, what we have discussed till now. Who has gone through all the session? Just write the keywords. So that will be a quick refresher for others. Okay, please write in chat box. What are the different concepts we have learned till now in the basic of finance module? I hope all of you are able to write in the chat box. Okay, fine then. Okay, fine. So I'll just discuss. I haven't received any answer. So I'll give a quick brief about what we have discussed so far. We had discussed about the what exactly finance is. In very basic terms, we discuss about what is finance, how we are going to use it, and we had discussed about three important decisions in finance: investing decision, financing decision, and dividend decision. There we discussed, this is, I'm talking about yesterday's session where we had discussed about three important decision. And in these discussion, we had discussed about the dividend also. We have discussed the retention ratio, dividend payout ratio. These all things we have discussed in brief. And what is the big benefit? Prior to that, we have discussed about the different level of finance. Personal level, public, personal finance is there. Public finance is there. And what is the third one? Corporate finance. Yes. Fine. So I started receiving the answers. Yesterday, there was one topic, dividend and buyback of shares. There was yield concept. Okay. Fine. You see, Tanisha, we are talking about the yield. Yield is means the return you are deriving. It could be, let's say, if I talk about the return in terms of one-time investment, my return is the CAGR only is my return. If I have invested for let's take 2 or 3 years, what is my compounded annual growth rate? CAGR, right? And another thing is if we talk about the bond yield where we are receiving the coupons as well. Coupon payment, then we calculate yield. I will discuss about yield to maturity concept where we will discuss how the bond yield is calculated. Then the concept will be more clear to you with the examples and all. Most probably next module which I'm going to take will be the fixed income security. So how we are going to proceed? First is the basic of finance. Then we will discuss about this fixed income security. Then we'll proceed to mutual fund. So this way we will start discussion. Fine. I'll give you a brief. Yes. So next is we were discussing about the investment decision, financing decision, investment decision. NPV and IRR, Gaurav will discuss today. Prior to that, three broad areas or categories of finance where we discussed about the personal finance, public finance, and corporate finance. So in personal finance, we had discussed about the different areas which are used in personal financial planning. For example, we discussed about the risk, we discussed estate planning, we discussed about the investment management and other criteria as well. So that was part of personal finance. Other than that, we had discussed about the public and corporate. Why do they use it? Why it is important? So capital budgeting is important. How they are these corporates are taking the financing and investment decision. These all points apart and entities involved. What were the entities involved in this decision? Then we discussed about IPOs, FPOs, fine, merger and acquisition, and brief. These were certain transactions which were carried out. Now today, the maximum we will discuss about the part or the subtopics which we are going to discuss is about price, the PV and FV concept means time value of money, and we will calculate all the things in Excel. So if some of you can easily open the Excel simultaneously, you can, or else you can practice later by watching the video. Right? How many of you can open the Excel simultaneously? Just raise the virtual hand. Fine. Others, what you can do in your keyboard, you will find a window symbol, window, and side arrow key. Once you press all together, it will be shifted and then you can adjust. You can minimize this. You can open a fresh Excel sheet, a new Excel sheet over there. Okay. Fine then. Let me just come back to. So fine, we are going to discuss about TVM. TVM is nothing but time value of money. Anybody can explain in brief what is time value of money? Yes, please write your answers in chat box. What is time value of money? What do you understand by? Okay. Here I'm going to write answers which you all are typing in chat box. So one is saying tenure. Okay. Others? What is time value of money? The value of money after a certain period of time. Okay. Third one is inflation. The value of money in future grows. I'm not making any modification. I'm writing as you have mentioned in the chat box. Then we will discuss about these concepts. Value of money after a certain period of time increases. A return will get okay. So you talk about return, you talk about certain duration, which is in future. Means you are talking about future value. Return will get sum of money is worth, yes. So one line answer is sum of money is worth more than future, right? So I'll just summarize it. Let's say you need to receive an X amount, 1 lakh rupees. So what is your option? Would you like to receive today or after 1 year? 1 lakh received today is worth more than 1 lakh received after 1 year. Right? Yes, Aryan. So some of you have written concise answer is the value is worth more than what you receive in future because of time value of money. You can invest that. Why? You can invest that 1 lakh rupees. Let's say you are investing in FD only. Then how much you are getting? You are getting 7.1% return. So money which you are receiving after 1 year, there you are not going to receive any interest. You are not invested into it. So that simply means it is worth more today what you receive after 1 year, 2 year, 3 year. Okay. Let me quickly read all the answers. Some of them I have written. Tenure you talk about, then inflation. Someone Tejas will come to that inflation point as well later. It depreciate because of the root causes what inflation, and second you are not investing means reinvestment. You are investing and getting the return out of it. So that with what you are receiving after 1 year, that will not even remains worth 1 lakh. What you can buy from 1 lakh today, you won't be able to buy after 1 year because that prices of that goods or services will increase. So there we can apply your concept inflation, your point. Basically, what we are discussing first is the definition. Second point comes to your point, like depreciation of money, because inflation will be there, that let's say 6%. So that means that should be 1,06,000, but you will receive only 1 lakh rupees. Okay, fine. So you all have contributed and mentioned. So we cannot mention these keywords only. Summarizes, we'll club all the words together and frame it in such a way so that we'll get what exactly time value of money. So you might have heard about one bird in hand and two in a bush. So one bird in hand is worth more than two in bush. Now, coming to this point, time value of money, it's a core financial principle. The first line states, let me erase this so that you all can see what is written over here. Core financial principle that states a sum of money which is received today is worth more than same amount of money to be received years down the line. We have taken one example of 1 lakh which you receive today or 1 lakh after 1 year. Similarly, you can exceed the amount, you can exceed the number of years, you will calculate the present value of future cash flow. You will come to know how much it is right now. What is the present value right now? So what are the different factors associated with it? That is opportunity cost. What is opportunity cost here? That will be, as we have discussed, we can invest right now. We have that amount in hand. We can invest in some of the financial instrument or anywhere which will give appreciated return, which will give certain more return as compared to money kept idle. Second point, inflation, which one of you have mentioned. So that is the prices of goods and services will increase in future. So you will not be able to buy that goods or service with the same amount in future, right? So the value of money will decrease once we talk about inflation. Uncertainty, something could happen to that money before you are scheduled to receive it. That means we can talk about the default, we can talk about like default is you have invested that amount in bond and that bond is not able to pay you because of the bankruptcy, because of default. Any party who has promised you to pay after 1 year, he is not paying. So default risk is associated with it, uncertainty. Third, if you invest in, let's say, in equity, I'm quoting certain example to make it more clear for someone. Uncertainty, let's say you will be receiving after 1 year or 2 year, but at that, if it is an equity, after 2 years you will receive, but the money has depreciated. So that is uncertainty involved in that amount. Any doubt, any point which is not clear to anybody? Okay, fine, clear. Now, coming to the application part, where we utilize the concept of time value of money. What are the different areas where we are going to apply this concept? So, loan valuation, although it is not included in the course, but how we can do it, loan valuation, amortization table is created. You can easily create this amortization table within 2 to 3 minutes. Once we discuss Excel, I'll let you know how to calculate it in easy way. Bonds valuation, you are calculating yield to maturity, rate of return, that is yield of the bond, yield to call, yield to put. There are different categories of bond with call option and put option. So for call option, you will calculate yield to call and yield to put so that you should understand how much the bond valuation is. Then capital budgeting decision, we will discuss about the NPV and IRR to decide whether this project is worth or not. Decision for the corporates, whether to go for that project, whether that project will be feasible or not. Okay, so IRR, if where the rate of return IRR is higher, they will prefer that. Which project is given higher rate of return? Difference between time value of money and inflation. Prachi, these two concepts are different. Time value, inflation is the increase in prices of goods and services. The product which you are buying today is costing some X amount. Let's say I'm buying a car which is costing me 19 lakh today. For certain product, it might vary. Like I'm taking a car, so that means if a new version of car is available, so there the changes. Let's take a simple example of land where the value is appreciated. If I can buy some land at, let's say, or any flat which is costing 1 crore today, will that flat be costing me 1 lakh, 1 crore rupees after 1 year or 5 years? No, the money that will increase. So inflation on property, similarly inflation of food or inflation on different product. For education, the inflation is different, rate of inflation is different. In case of education, what is your fees? What is this fees of any of the education which is doctorate or which is engineering? The fees which is costing today will increase after 5 years, 4 years, right? You can associate this with your fee calculation. Someone has done MBA 5 years back. So the fees at that point of time and fee now has changed. So that means inflation. No. It's not all same, Prachi. Don't get confused. Here I'm just explaining about the inflation only. That means increase in price or services which we are buying. Okay, time value of money is a little different concept. Time value of money is related, somehow it is related with inflation because the value will not remain same. Reason is inflation. The money which you are receiving is 1 lakh. After 1 year, what you can do? That 1 lakh you will not be able to buy that same product which cost us 1 lakh rupees today. That amount will increase. If that product is costing 1 lakh 6,000, after 1 year, you have only 1 lakh. So here, just the value of that 1 lakh is depreciated by 6% due to inflation. Now coming to another point which I wanted to explain is the 1 lakh which you receive today, you are investing in something, some of the financial instrument. If I'm talking about in perspective of individual, I am investing in FD, I'm getting 1 lakh, 7,100, 7.1% interest, which FD is giving. So that means if inflation is 6%, I'm getting 7%, at least 1% higher. So effectively what I'm getting? Effectively, I'm getting 1% if I talk about the inflation, so additional. Now I hope it is clear to you what I was trying to explain you. Prachi, is it clear? Okay. Concepts are linked, but the point is different. So investing, then what you are receiving this point. Inflation is another concept which we'll discuss in next step. Okay. Now next point is investment analysis. Investment analysis, you are trying to compare different options. So you are analyzing which investment vehicle, which investment product is giving you better return as compared to the options available to you. We are talking about application of TM, where we are utilizing the time value of money concept to analyze investment opportunities for utilizing for loan valuation and loan calculation. That means amortization table is calculated if the fixed interest rate is feasible or floating interest rate is feasible for you. Based on the tenure of the loan, based on EMI, you will come to know what will be most suitable option for you, whether choosing this tenure or increasing the tenure or increasing the EMI. So these all things can be easily done through TVM concept. Coming to personal financial analysis, again, personal financial analysis include a lot of goals, deciding about the education part, deciding about the time and planning, and all these these analysis can be easily done through TVM concept. Equity valuation. Yes, definitely, Gaurav. Once we talk about the NPM, net present value, and we calculate IRR, equity valuation also we can do through about CAPM model, DCF analysis. These all can be easily done to this because base concept is time value, future value. There we are making projections about that. Right, forecasting is being done. We are calculating the intrinsic value of company and we are comparing it with the current market price. If the current market price is higher and the intrinsic value is less, that means the stock is overvalued. This way we analyze. So based on this, we can do that. Base concept is same. Base concept can be utilized in more advanced way. So equity valuation is DCF only, discounted cash flow analysis can be done. And then or relative valuation is one more way by which we compare the peer group. There we use ratios in relative valuation. What causes inflation? See, increase in price of goods and services. There could be different factor, demand increases, that these all will cover in basics of economics part currently, right? One is the demand and supply. In case of increase in equity prices, if you are talking about price of the stock which is increasing, so prices of the stocks are increasing for one factor. Number one, the fundamental of the company. What we can say, the thumb rule or the basic rule. That means the company is performing well, fundamentally they are strong, they are doing well. Second thing is demand, like people are more once the company is doing, both are interlinked. Once the company is doing well, people will be more interested to invest in that company. For example, we know about the large cap, mid cap, large cap companies or blue chip companies. So as an investor, we are sure that this company is gonna do well. So my money will be appreciated, the amount which I'm investing will appreciate. So that means they are investing demand for these blue chip companies who have already performed well. They have a maturity stage or growth stage. So they have proved themselves. They have a good track record, A+ rating. Blue chip companies are there. So even if the PE ratio is higher, then too investors are willing to invest in that company. So demand for those stocks are higher. Thereby the prices increase. The price increases. Okay, how many of you are aware about the rule 72? Just raise the virtual hand. Anybody who can explain about rule 72? Okay, once if nobody has written, okay, one answer. Money getting doubled after 4 years. Not 4 years, Dheeraj. It depends on, you have written correctly, money getting doubled after 4 years, not exactly 4 years. It depends on the interest rate. How long will it take to double my money? So you will divide it by 72. Similarly, you can take, the calculation can be done by two ways. If we want to understand the interest rate, or if we want our money to be, how long will it take to double our money if the interest rate, let's say 6%. If the interest rate is 6% and rule 72 says it will take 12 years to double my money. Yes, yes. Double your money at a given annual rate. So I have assumed let's the interest rate is 6%. So rule 70 says 2. According to rule 72, I'll divide 72 by 6. I'll get 12. So it will be 12 years. It will take 12 years. If you increase the interest rate, the number of years will decrease. I'll just write down. Let's assume I get 6% return. I invest in fixed deposit, or say, let's say any product which is giving me, or now we can take the example of bond, 8%. So this is the percentage of interest which I'm getting on an investment. And this is 72. 72 divided by 8%, you will get 9. So it will take 9 years to double my money. And once you calculate in Excel also, with the Excel formula, you will get nearby. It could be 9 years, 9.1, 9.2. We'll do it today only. Once we are practicing Excel, we are calculating future value and present value. We'll apply this concept also. Once we will do through interest, rule 72, and we'll do it through this TVM formula, or say Excel. Tejas, that is different point. We are not talking about that FNO and all. Risk is also there. So here we are talking about only the basic or thumb rule criteria. It can be doubled, it can be 0 as well. So general guideline for determining how long will it take an investment to double its value, or what is the rate of return required for an investment to double in value. So two ways, 72 divided by annual interest rate, what I have just done, like 72 divided by 8%, we get 9. So complete accurate result is not that, but yes, it will be close. As I told you that once we calculate in Excel based on putting all the values together, we'll get nearly close amount, close number of years, right? So this is the example. 72 by 6 means 12 years. And we right now, if you take the bond return or any of the return which is giving nearly 8%, you'll get 9 years. Fair enough? Any doubt, any question? Okay. Now the basic point is present value of single sum. Single sum means you are utilizing one-time investment. We are talking about the one-time investment which is done at, at a given point of time. Fine. So this is the way by which this, if we know the future value and we need to calculate the present value, the formula which we'll be using is this. And if we need to calculate the future value and we know the present value multiplied by 1 plus rate of interest to the power t or number of years. So here this is present value, FP is the future value. 1 plus rate of interest which I'm getting on my investment. T is for how long I have invested. Let's say I invested for 5 years. I'll take one example. Let's say I invested 1 lakh rupees. I'll not do it manually, we'll do in Excel, but here I'm just explaining about the formula, how you can do it. It can be easily done in Excel. It will take less time. Let's say the rate of interest is 8% and I invested for 5 years. So this 1 lakh multiplied by 1.08. 1 plus 8% is 1.08 to the power 5. So first you solve this, multiplied by 1 lakh will give you future value, which we can easily do in Excel. Okay. If you have opened, you can calculate and let me know what is your answer. If someone who has opened the Excel, just quickly get me the answer of this. What is the future value? And how do we compute the present value? We have this one is written 1 plus I interest or rate of interest to the power r, n or t, number of years. So that means future value we are talking about compounding, and present value we are talking about discounting. So just reverse of compounding is discounting. Anybody got the answer? Okay, now just I'm noting down the values in my mind so that once we open Excel, or just remember these values which I have randomly put here. Present value 1 lakh, rate of interest we have taken 8%, and tenure is 5. Okay, Gaurav, you got the answer 146,932. Right. Two of you have raised it. Okay. So this is what I have just explained about. This is single period. Single period means 1 year investment. It is not, so it will not, compounding will not be required. So here you cannot see to the power. If you put to the power 1, that will give you same result. Multi-period means you will multiply it or to the power number of years, number of periods invested. We can calculate for the quarterly, we can calculate for half yearly, but we'll make changes. We'll make those changes to the rate of interest and this tenure also in case of half yearly or quarterly compounding or monthly compounding. Similar treatment to these both area. Here it is R percentage. Okay, Monisha, you got different answer. I just note down your answer 127,628. This is one. Others have written this 932.8. We'll do it. Okay. Fine. Then this was the basic of how to calculate the present value and future value. Now we'll quickly move to Excel and there we'll do. Okay, this I was talking about if you need to calculate for semi-annual or quarterly or monthly. So with the same formula, what we have done here, we need to calculate future value. But here, the rate of interest which we are getting is given as half yearly or compounding. So what we are going to do, let's say it is 8% half yearly compounding. So 8% divided by 2, right? So that means 1 plus 4%, 1.04 to the power. It is semi-annual if I have invested for 5 years, but it is semi-annual. So n into t, 5 into t, and here the rate of interest divided by half. What we have done here, we need to change the power as well. So synchronization is very important in this aspect while taking semi-annual and quarterly, right? Rest all things are same. Only these treatments should be taken care of. Once you do 1 or 2 examples, it will be more clear to you. Okay. So 1008%, 3 years. Let me open the Excel sheet. Just note down this question. Future value is given, that is 1000, rate of interest 8%, and 3 years. We need to calculate PV. Okay. Stop share. I'll just open the Excel. Let me increase the size. I hope the screen is visible to all of you. All of you can see the screen? Okay. We need to calculate PV. FV was given. Let me know if I have done, I have made any changes. What was the rate of interest? As far as I remember, it was 8% and N per was 3. Am I right or wrong? Is it right? Okay. Let's note down the previous question also. In previous question, what we asked, present value was 1 lakh. Rate of interest, what we have done, 8%. Was it 5 years? N per in first question, where you all have given 1 lakh 20 or 149, 146. Yes, 5. Okay, fine. So these were 2 examples which we discussed. We'll do with different ways. I'm not going very fast because some of you are very new. Some of them I can easily understand. Some of you can easily do PV and FV calculation the way you all are answering. So let's bear with others also. That is why my pace is not very fast, right? So this is about how we are going to do. We'll do both the ways. Formula you all remember. Here we need to calculate PV. So that was discounting. We know that FV. Click on this. Divided by 1 plus rate of interest is this to the power 3, right? This is 793 present value, PV. Okay. This we need to determine. 793. Okay. How many of you have received the same answer? Now coming to this part. This is first method by which we have done discounting. Here also we need to calculate FV. What we are going to do? We are going to do through normal formula, the TVM formula which we have just learned. So FV equal to present value multiplied by 1 plus rate of interest to the power 5. How many of you have given this is right? Manisha, I think there is some mismatch. You might have mentioned some wrong calculation, which might have taken 4 years. That is why your answer is not matching. Do it with this way. So first method is clear to everyone. But usually it is not. We don't use it in Excel because it takes more time. Sometimes we can do it, but I'll tell you another method also by which you can do it. Okay, I'll show the formula. Here you can see. what I have done, this is the future value. So my cell number C4 is showing the future value divided by 1 plus rate of interest. C5, my rate of interest is mentioned, and then to the power 3 n per. This way we have calculated present value by discounting this future value. Now coming to this question where we need to calculate the future value, we had present value. So present value multiplied by 1 plus rate of interest to the power number of years. So number of years is mentioned in I5. You can see. Whosoever wants to see the formula can check here. Or what I'll do, I'll copy it here and paste it here so that all of you can see what I have done. This is I3 multiplied by this. Similarly for this also, whosoever want to see can check here. Okay. Right, this is the formula by selecting the cell. Monisha, you want me to use the values directly? I'll do that. But that is not preferred way. Reason being, once you are, every time you are writing, you are taking more time. By doing this, if you change any value, let's say I'm changing it, my answer will be quickly changed. If I type the values over here, I'll do it for you. Since you are saying rather than doing this, I can type the values, I'll do that. So PV, what I have done, 1000 divided by 1 plus 8% to the power 3. Okay. So now I'm copying it here for you. Now just check the answer. Let's say in the same question, I want to make certain modification. I need to change one value. Here I need not change, but this will not change since here I have put it manually. So once we are doing it on the large scale of data, we should always use the cell references rather than typing it manually. It will be more time consuming once we type it manually, right? Karandeep, I'll come to you. That why it is coming, I'll tell you. You have come to the Excel formula. In Excel formula, once I'm going to tell about that, then you need to take care this thing in mind. It will always come. Once we are calculating PV, it will come in negative with negative sign. Are you talking about this? Here it is coming. Once we put through this formula, it will not come negative. Once we use through Excel formula, it will come negative. Anybody who is feeling, no, not this one. In Excel, yes, in Excel it will come. It will always come negative. That is right. Because it is outflow. Present value is my outflow. I'm investing that. That is going out of my pocket. So that is negative sign. Whenever I am calculating it, I need to put negative sign in front of cash outflow. We will do it today only. So you'll come to me. It's not wrong once you are doing. Fine. Now the second method. This one was the first which we have done. Second, if we need to calculate PV, so equal to PV, what you need to do, you need to just write equal to sign, you'll write PV, open parenthesis, the formula is in front of you. Here you can see rate, N per, PMT, within bracket FV, and type. We need to understand the reason or the why we are mentioning this and how we are going to mention it. It is separated by comma. We should not make any mistake so that our answer is correct. Now PV, we are calculating present value. So what we are going to put equal to PV. First line, should be what we want to calculate. If we want to calculate future value, we'll put equal to FV open parenthesis, means open bracket. What is rate of interest? It is written rate. My rate is 8%. I'll put comma. What is N per number of periods? How many years I'm investing? What is PMT? PMT is used for regular payment. If it is loan, so I'll be paying EMI that will come in PMT if I'm calculating from the perspective of loan EMI, or I have invested certain amount, it is going, outflow is in terms of SIP, that will be in PMT. If I'm receiving something, that also will come in PMT. Let's say annuity, where I'm investing some amount and I'm receiving fixed amount on monthly basis, maybe quarterly basis. So that will be PMT. So PMT can always be outflow, inflow, both. Depends on we are calculating for which instrument. If it is for annuity, that will always come inflow. So in that case, I will not put negative sign. If it is outflow, we will put negative sign. If I'm investing 1000 rupees per month as a SIP, my PMT will be minus 1000. So with negative sign, I'll put 1000. Here in our case, our example, it is 0. What is future value? This is future value. What is type? You will get two types, end of the period and beginning, or you can type 0 or 1. These are also important. The perspective behind 0 and 1 is considered as beginning of the period. That means when I type, once I type 1 in this formula, that considers, Excel considers, I am making investment in the beginning of the period. And if I put 0, that will be I'm investing at end of the period. For example, I'm investing in January, I'm investing in December. So it will give a different calculation when it comes to compounding. Once I'm investing at end of the period, that amount will not be compounded. So you will get answer. There is a difference in answer if you mistakenly type 0 rather than 1. Okay. So once in the question it is given, or once you are in real situation, if you are calculating for annuities, usually for annuities, we receive at end of the period. For investment, we always consider that investments are made in the beginning. You are investing in SIP beginning each month. It's not end of the year. So there we'll take 1. Here I'm taking 1. All of you have seen this in Excel? So here 793, what we have calculated manually through this formula is done. You can quickly do it. It took me time because I was explaining each and every parameter which was included in the formula. Any doubt with this PV part? PMT, I'll come to that. Susan, I'll come to that. First, let me finish with PV, FV. Then next, we'll take one example. We will discuss about PMT as well. Okay. So is there any doubt related to PV? Anybody? All of you are able to do that? Monisha, for that, if there are different ways by which we'll calculate XIRR, putting the date. If I'm investing manually, it's not SIP is not deducted or debited up on 1st of every month. It sometimes you have invested lump sum amount on 5th of March, and then maybe April you have not invested, then May you have invested some amount. So we will calculate that through XIRR. We'll put the dates and whatever the amount outflow and how much you have received. Let's say you have received dividend also. You have received some dividend from your mutual fund. That will be a positive cash flow. That will also be included. And we will arrive at the exact calculation how much return our investment has generated. Okay. So for middle, we will take XIRR. We'll do that as well. Don't worry about that. Fine. So PV, no query. I'm moving on next to FV. So through Excel, how we are going to do equal to FV within bracket. What is rate of interest? 8%. This is 5. PMT is 0. Then what is the present value? This. Here I'll take negative sign. And type is 1. Answer is same. So here only in the box you just put negative sign because it is cash outflow. Okay. Fine. All of you are with me? Any doubt, any query related to these two? No. I want to see all the hands raised who are clear with this formula. No doubt. No doubts, please raise hand. No doubts. Manisha will discuss about the cash flows. Cash flows could be why negative? I'll tell you. Wait, okay, thank you. Everyone who has raised hand, please lower your hand. Yes, yes, Reshmi. Ayush, Reshmi. I'll tell you one more time. We'll take different formula, different calculation. Here, first we'll take different values so that it should be clear to you. Let me take this. Make certain changes. Let me know. Rather than 1 lakh rupees, I'm investing 2 lakh rupees rather than 8%. My investment is giving, let's say 10%. I'm investing for 7 years. Okay. Same question. I have changed the random values. Now we'll calculate through Excel formula, FV. Here, what is first? You need to put equal to sign, write FV, what we are calculating, that is future value. What is rate of interest? I'm getting 10%, separated by comma. What is number of periods for how long I'm investing? I'm investing for 7 years. Do I made any regular payment apart from one-time investment? This PV is my one-time investment. PMT states, apart from one-time investment, if I'm making some regular payments also, if I'm making some regular payment, that also I will add here. I add in terms of what? With negative sign, how much amount I'm paying regularly or investing regularly. Okay, so in our case, our example, it is 0. That's why I'm putting 0. What is my PV? This one-time investment. Then type, since it's an investment. So beginning of the period I'm considering, I put 1. Did I make some mistake? 1 second. Let me quickly do it. Rate of interest 10%, number of periods 7, PMT 0. This is 2 lakh PV, like this one. Okay, fine. I think this page was pressed, that's why. Anybody, any doubt? This is our future value. Formula I'll show you here. And if you want me to write manually, do manually. I'll do manually as well. Equal to, what is future value? What is rate? Rate is 10%. Sorry. 10%, N per is 7, then PMT 0, PV is -2. Write this one. Okay. So here I go so then you all can see. I hope it is visible to all of you. Now I have done this. Okay. Type is always, see Manisha, there could be two ways. One, either the investments are made in the beginning only, or if it is made at end, you will put 0. In case of annuities, just like pensions. So pensions, once it is received, it might be at the end of the year. So that means once you complete 1 year, you receive pension. So in that case, we put 0. Loan EMI, in case of loan, in case of bond coupon, we pay, we put 0. Once we are calculating bond yield, we'll calculate yield to maturity. In case of bond, we put 0 here, where you are receiving at end. Karandeep, I'll explain it to you. Once we move to PPT, I'll explain. I have just read your question. Can you explain this diagrammatically, the beginning and last year formula part of Excel, where we take 0? Right, sure, we'll do that. Okay, any other question? I have doubt outflow and inflow. Reshmi, I'll explain about outflow and inflow. So what is outflow? Something is going out, means any investment is going out of your pocket is cash outflow. If you are investing in mutual fund, if you are investing in equity, that means you are investing something from your pocket. It is cash outflow. Inflow, you are receiving some amount. For example, you have invested in some business, that is 10 lakh rupees. So first 10 lakh is outflow, which you have invested. That will come with negative sign. Then next year, let's say you receive some profit. You receive 50,000 rupees. That is what inflow. So here, if I try to explain you have invested 10 lakh, 10 lakh. Okay. Here 0, this is your outflow. Outflow, I put negative sign. Year 1, year 2, year 3, 4, and 5. Next year you received, let's say, 1. Then you received 1,50,000. I'm putting random value to make you understand. This is what you are receiving. 1,50,000. Then 3. Anyhow, I wanted to make. Okay, so what is the rate of return? How much you have received from year 1 to this? Right, I have not done this. This is what you have received, or another way is you can add this 11%. So your rate of interest return is 11%. You have invested 10 lakh rupees and this is what you have done. You have received this. So first will be negative and rest all which you are receiving as inflows. Let's assume in 5th year you have not received something, you put some more amount. I'll add one more point over here. This is just a random example from investment. 5th year you don't receive anything, or you have invested this amount. You invested 5 lakh rupees more. 6th year you invested, you received more amount, let's say 8. And then you receive 4. Now let's see what is your internal rate of return. You will select all the values, same 11%. Okay, so here you can say inflow and outflow. This is rate of return on your investment. Investment you made first in the beginning, and this then again you have invested, and these are the inflows which you are receiving as a profit. Okay, fine. Clear, Rashmi? Outflow, inflow. Any other question? Any other doubt? Now one doubt is left for the Karandeep. He is asking about 0 and 1. Okay, diagrammatically, once we reach to the PDF PPT part, I will be able to write down there only. I don't think in Excel I can write. Can I write here? It does not allow me to write. Fine. Let's reach to PPT and then we will come back again after explaining this. So this I was explaining, and what you asked. Karandeep, you asked about the beginning and later. So first go to this part where I have mentioned about these functions. Here, you wanted me to explain about this type. So first was what? Present value. This is rate percent, let's say 8%, number of periods if it is 5 years. PMT, if I'm investing something, then it will be negative. Apart from this 1 lakh rupees, let's say I am investing in any of the instrument, any of the financial instrument, 1 lakh rupees at lump sum. This PV is my lump sum investment. This PMT is my regular investment. Apart from that 1 lakh rupees, I am investing, let's say 10,000 more. So this also will be with negative sign. Always remember, once we are making an investment, it will always be cash outflow and it will be with negative sign. If you are not putting, your answer might be wrong. So always remember these all points, and rate of interest always with percentage. Okay. If you are not putting percentage, you might not get right. This is for the beginners I'm telling. because some of you have done it correctly, 2 or 3 of you. So for rest, always remember these could be minute mistakes. Okay. Now next is what? This future value. If you know, this future value will be what? Inflow or outflow? It will be with positive sign or negative sign? Yes, please let me know. Everyone said positive. Nobody has noticed my mistake in this. Anybody noticed any mistake? Just let me know where I have PV in minus. I should not put this amount. This I'm calculating. This I just mentioned to make you understand about PV will always be with negative sign. In this formula, what I'm calculating, what I'm deriving only present value. So if I know what is present value, why will I calculate? So in this, future value will be with positive sign. If I know the future value is, let's say, 2 lakh rupees, and this I'm investing regularly, how much I invest more apart from this annual monthly payments, how much I should invest more to get that this future value. Okay, it should be more because as I see the 10,000 rupees annual amount, this is 50,000. How much I need more to get 12 lakh rupees or even 2 was also fine. Now coming to the type, this was your question. Type is 1 or 0. So this 1 means beginning and this is end. That means I'm investing, let's say in the same formula, I am investing this 10,000 rupees at the end of the period. That means I'm investing, if it is, we are talking about the calendar year in the December. Okay, I'm investing in December and I'm trying to calculate it as on today. So that means based on this, the calculation will be done. The compounding will be done. I will put 0 if I'm making this PMT at the end, right? So it will take me more time to achieve this goal, or I'll be needing more present value to invest to achieve this goal. If it is end, there'll be a little difference in terms of amount. You can try one example where in one situation you put 0, in one situation you put 1, and there will be a change in terms of this present value which you are calculating. You can do it, okay? I think it is clear now. No, it is for both. See, this is PV. This is calculation of PV. Who is saying you are calculating FV in PV formula? No, no, Tejas. This one is from the Excel only. This is PV. This is calculation of PV only. We are calculating PV. We know what is the future value. Future value is, let's say, 12 lakh rupees. We are investing at beginning or end. This, by this formula, I want to understand how much I need to invest lump sum today, so as to get 12 lakh rupees as my future value. The formula is completely fine. Okay, we are calculating PV only. One more parameter we have added, that is PMT. Apart from this regular payment, which I need to calculate, I'm investing this much amount. Okay. PMT, Prachi, is regular amount, just like your EMI you are paying. Aryan, we can calculate that also if PV is given and FV is missing. We will use different formula what we have just done. Wait, this one. Let me go back. In this, what we are calculating? Future value. So in this, let me take in, sorry. So here you are saying that what if we need to calculate future value and the PV is given. So this is the formula. You will write equal to FV open parenthesis, and then you will write 8, let's say rate it 8%. You invest for 5 years. PMT we are taking 0, no annual investment. And we have PV, let's say 1 lakh rupees. Type 1. How many of you have opened the Excel right now? Please quickly calculate this. I think this is the same example we have begun with. We have calculated FE 1,46,000 something, as far as I remember. Okay, Aryan, clear? Okay. Now coming to next question about beginning and end. We will do it and we will do it through Excel so that we can understand what is the difference. Okay. Stop share. Quickly share Excel. Okay, fine. So here only we will take certain modification. We need to calculate FV and we are saying that rather than in the beginning, we are making the investment and at end. Let's change it to 0. A little difference, but once you increase value, let's say the amount is higher, then it will make more difference. Okay. Yes, here you can see up to decimal points. If I'm changing here, more the value, more will be the variation. Okay, I think. Hello then, okay, no problem. You can take certain factor, but yes, variation will be there in case of 0 and 1. You can understand about the compounding. Compounding will be more in case of beginning rather than in case of end. Here I haven't. Okay, everybody clear? Now what we wanted to come next about the NPV part quickly. This PVFP is clear. PMT, let's take PMT also into consideration in the same example. In first example, we'll take PMT also. Let's take, apart from this one-time investment, you are making a regular payment of, let's say annual payment of 5,000. Then we need to change the formula. Here equal to, if we, what is rate? 8%, number of periods 5 year, PMT minus 5,000, PV beginning. Here you can see the difference if you keep on putting certain more amounts. So this is why trial and error and different calculations are done for the financial planning as well. If you need to achieve, this is what future value is, what the amount you want to achieve. Let's say your financial goal is after 5 years, you need to get 1 crore rupees. How will you achieve it? If you are investing, let's say 50 lakh rupees today, and how much you need to invest if you are investing in an instrument which is giving 8% for 5 years, will it suffice? Will it reach to that purpose which you require, or you need to invest certain more amount? So PMT you can calculate. If you need to calculate PMT, you can calculate with the same formula. Now I'm coming to another aspect of calculating different parameters from this one example only. Okay. I'll take this example, copy and calculate different parameters from the same formula. This is, we have taken PMT also into consideration. Now what? This way you will cross check also. Now let's, in the same formula, I need to calculate PV. PV is not given. You know the PMT, you know the future value. We need to calculate PV. So I'm highlighting it. What I'm calculating here is PV and rest of the things are given. This rate is given, NPER is given, PMT and this FV is given. Equal to PV. Rate is 8%, 5, PMT this, future value this, type is 1. Got it? So you have got the PV. Now, let's say other values are given and you need to calculate how much rate of interest should be there to achieve this amount. If you invest 1 lakh rupees for 5 years and 5,000 per annum to achieve this, what should be the rate of interest? So here I'm calculating rate with rate function. 5 years. What is PMT this? PV this. This is my FV. 8%, right? In the same question, what we have done, we have calculated future value and next PV if other factors are given, then rate. Now we need to calculate for how long we invest. So if you need to calculate N per rate of interest 8%, PMT is this, PV is this, future value is this, 5. So clear? See, this is the simplest way by which with one example only we have calculated all the parameters and you have cross-checked also. No, Abhijit. 0 is for end and 1 is for beginning. You can check the formula. Wait, I'll show you here. Look, 0 end of period and 1 beginning of period. Anybody who is having doubt, you can clearly see here on my screen. You can see 0 is at the end, 1 is beginning. Okay. Fine, this one is clear to everyone. I hope there is no doubt. If you have any doubt, you can ask right now. No issues. For everyone, it is clear now. Yes, Suzanne. See, for that, we will discuss about XIRR function. If you know the specific date, once the investment is made, we will put that. Okay, we'll take one example and do the invest. This is about the basic parameter. What are the requirement once lump sum investment is given? So many complexities can be added over here. Let's say if we are not having one exact amount that like here in this example, we have taken 5,000 as annual amount. Sometime it could be in tranches. So sometimes I'm investing 5,000 rupees. Maybe next year I invest 6,000. If it is not even, if it is not same, we'll use XIRR function to calculate rate, right? We might be aware about the present value. Fine. For this, we will calculate like XIR, what is the rate of interest, how much it will be value, or what we'll do for certain period once we are getting let's say 5,000 for how many years? For 3 years. So here for 3 years, I'll calculate future value and then with the next investment. So there, if it is an investment, we need to do multiple for multiple phrases. For first phase, if it is 5,000, till that time we'll calculate the future value and next future value we'll add with another investment which is having less amount or more amount. Wait a minute, Karandeep, I'm just taking your question and then calculating it. This is, you are asking if 1 lakh plus this 20,000 PMT. I'll change the values. One. Okay. Next, what you are saying for PMT, you are saying 20,000. 5 years. Rate of interest you want to keep same? Mm. This one is the amount which for your question which you have typed in chat box, not 178. Because here I have taken 5,000 and for you, like 20,000 you have taken. So for 20,000, it will be 1 lakh rupees at one go lump sum plus 20,000 per annum for 5 years. Will your money appreciate at the rate of 8% will give you this 2,73,651 rather than 178. No, no, no. How will we cannot directly multiply it with the 4 because that amount is also growing. First year it is growing, then compounding, then only you'll get the exact result. That is why we are calculating through Excel to get the compounding effect. Okay. Rudra, I have just checked your question. It's your first class, no issues. Whoever is attending for the first time, they can go through the previous lectures, which is available in your LMS. You can just check it, go through it, and then if any query, any doubt, you can discuss in the next session. You can raise a ticket. Okay. Wait. Prachi test will be maybe next week. For that, they will inform you. The team will guide. We'll take a if anybody is interested in taking break, we'll take a quick 5 minutes break. Then I'll just check your question, Abhijit, and we'll respond. Just quickly take 5 minute break and we'll come back again. Right? Is everyone come back? Has everyone come back from the break? Are you all there? Okay, fine. Okay. Joyce, no issue. If you are not perfect in Excel, gradually you will get the pace. What you need to do, only start from the basics, go slow, but the point is clarity should be there. You can go slow, you can type very slowly, but the point is you can take more time in the beginning, but the correct answer should be there. Means you should understand and apply the formula correctly. Whatever speed you want initially, you can take that. And gradually, once you learn this, automatically you will get pace. So no worries about that. Nobody is expecting perfection and nobody is perfect. Okay. Initially, no one is thinking about the perfection, that how perfect you are. We all are learning at some point of time. So during that time, we need to try for accuracy rather than speed. So first is try to find the perfect solution. Are we doing right? Then it is fine. It could be slow, it could be very slow, doesn't matter. Only towards the accuracy. Pay attention to accuracy only, nothing else. Okay, I hope I'm clear till now. If any doubt, any question related to whatever we have discussed so far, just let me know. And then we'll do certain calculation, means a few examples, so as to understand how easily you can do this. Can you please use the PV formula from Excel with another example? Okay. Yes, Paras, WACC can be calculated. Two questions, Abhijit. 1 second, let me just go through. One-time SIP and put monthly more money. What exactly you want to say? I'm taking all the questions. Just stay there. I'm reading. I'm answering for one question, and then I'll come back to it next if someone is there. So, Abhijit, your question is one-time SIP. Means you want to say SIP means systematic investment plan. So one time, there are two words which you have mentioned in the chat box. One time SIP cannot be there. It will be one time investment, that lump sum investment. Let's say I had invested 1 lakh rupees. So this is not my SIP. This is my one time investment. That is lump sum investment. And next you are saying if put monthly more. One time you have invested, let's say 50,000. Okay. And monthly you want to invest 5,000. This is what I'm taking from your example. It will not be counted monthly. You are investing this. It will not be counted as yearly. This you have invested one time. This I have taken as lump sum. Or in the Excel language, we will take as PV, present value of what you have invested, with the negative sign. Next, what you said, you are investing monthly. This is what you are investing monthly. So that means in our language, it is PMT. Through the Excel, we will calculate. So it will not be counted as yearly. This will also not be counted as yearly. This is one-time investment. Both are different things. I hope you understood. Now, with your example, we will take few more figures to understand and calculate. This is my rate of interest. You are investing for 5 years. This is my N per, and this is my R, means rate. Now, if I need to calculate how much I will receive after 5 years, means my future value. Rate is this, N per is this. This is my PMT. This is my PV. And monthly you are investing in the beginning. This will be your future value. 1,05,146 rupees. If you invest 50,000 at lump sum, 5,000 monthly. Okay, now next question. Not perfect in Excel that I have read. Can you please use PV formula for Excel? This I have taken future value. With the same example, we can take PV. Okay, Ronak, your question I'm taking. So you asked, can we do with the different? So this is the different example. Someone from you only has typed this in chat box. I have added only these two things. So with this only we'll calculate present value. Hoping that this is like taking it as future value. So PV equal to PV. This is rate. This is N per. PMT is this. And future value is this. This, have you received this? Now answered your question, Ronak. Now WAC will come paras. WAC will also be calculated, and that will do with the module, I think, capital structure, but that can be easily done. I'll take a random example and explain you. Not right now, because we are doing some other calculations like PVFP concept only. That I will also explain, no issues. Abhijit, I think your questions are done now. PDF I have already shared, as I have discussed with the team, and I have sent them a message as well. Most probably they will upload it. I thought they have uploaded, but if not, by today it will be done. Please show PV with few more examples. We'll do that. Prachi. Yes, PPF rate. So now PPF rates are also calculated as same. For PPF, you know, it is what is the rate of interest right now. The same you can calculate through Excel. But you are investing there. If you are investing in the beginning, let's say in the month of April, you are investing an entire year, you are not investing anything. Let's say 1,50,000 you have invested in the month of April. So compounding will be done based on that. Let's say you invested in the month of October. So for that year, that will not be the full year 7.1% interest will not be paid. It will be paid for the months which are included in that financial year. Right. For 3 months, if you have invested, so for 3 months only the rate of return will be given. No, Gaurav. PMT can be monthly also, it can be annually also. One second. This I have not taken yearly. This I have taken yearly. Gaurav, wait. Now, if you say it is monthly, then how the question will be there? In the same question, if this is monthly, then the question will be changed. Wait. Yes, Abhijit, wait. I'm still with the questions which are still pending. So here I took annually, I'll calculate with the monthly as well. Now let me read other questions and then come to this. Coming back to this, again we'll solve it. In this case, total outflow. Got it. Wait. This I read it yearly. So I have taken yearly. Now, if it is monthly, how we are going to calculate? Wait. So here you can calculate by two ways. One is with this calculation and another is monthly. In case of mutual fund, what happens if you are investing an 8%? So usually we say that 8% will not be compounded. I'm telling you one more step ahead, which is calculation related to nominal value, right? So if we say that 8% will not be compounded, let's assume this is the case of FD. Okay. I'm not talking about that nominal rate of interest. I'm taking it as FD and it is being compounded. So 8% for this PMT, it will not be 8% per month. So 8% divided by 12 and N per will be this. So first I'll solve this portion. We can do by two ways. Let's take it monthly. So future value for this, where this is giving 8%. So 8% divided by 12. So monthly will be less. Now coming to this N per. So 5 multiplied by 12, 5 years multiplied by 12. And what is PMT? Is this. And what is my PV? In that case of PV, it's not monthly. You can add here also, or by putting it in different. Now this is the answer. This in case of yearly and this is in case of monthly. How many of you are getting this? Wait, let me read. Someone who has written this, whose answer is matching with this monthly? Got it, Manish? Okay. Now next question is what? This we have taken monthly. What we have done here into 12. But one more point. Let's take this PV0 and you can add later. Now, second way. First is this. We have calculated only for this portion and this will be for 5 years. So one-time investment here. Rate is 8% and 8%. Okay. Input is 5, PMT 0, PV is this, type is 1. For more accuracy, what we have done, we have added these two. This is for this investment, which is giving 8% 5 year. Here we are making monthly. So I have separated this and got this, right? Now, any doubt related to this part? Currently, what I have done here, this part I have calculated for this 50,000, which is lump sum. Now, lump sum I have invested for 8% 5 years and no PMT. I have not taken PMT over here. So what I have done for easy understanding, I have bifurcated in two portions. First is for this 50,000. This 50,000 will become 73, 8% interest and 5 years. Now coming to this PMT, which is monthly. So for monthly, what I have done, this 8% divided by 12, then 5 years. So 5 multiplied by 12. I'll be making 60 payments. So this is 60. And then what is this? 5,000. This G36. PV I have taken 0 and 1 is. Prachi, just whosoever is clear about the PV and FV part, don't pay attention to this question because here the confusion will increase for those who are beginners. Right? So I don't want others to get confused. Prachi, don't pay attention to this question. You thoroughly practice whatever we had discussed today. Because for one session, it could be higher. I hope who asked this question. I'm erasing this. You can discuss it separately. Otherwise, it will be difficult for others to get confused. Okay. Now, for others, I can mention few questions. If you want to note down, you can, or what we will do, I will share it with chat box, right? So, yes, these are 4 to 5 questions. I am sharing it with the chat box. This you can do as a homework. One by one questions will be available. If you want, you can add in your Word file. This we can discuss in next session. Okay. We wanted to do practice. So that's why I have mentioned based on only simple calculation based on PV and FV. Everyone getting? I have pasted 3 questions. Can you all see 3 to 4 questions are there? You can copy it from here, paste it in your Word or Excel, wherever you want. You can practice it. Other question also there. This I will paste in the form of table. Got it? Others, please. You need to calculate PV in this. FV1, this we have done in the session also. So if you want, you can change the values. Rather than 1,000, you can change the value to 5,000 or 50,000, right? Now here I'm changing. You can note down, Gaurav. Nobody is, how many of you are not able to copy paste from chat box? What you can do, you can maximize the chat box, take the screenshot. You can maximize the chat box and take the screenshot of that. Is it fine? Is it working? Just try to do it. So many options are there. What you can do, you can maximize the chat box, click a picture from your phone, Copy, paste, screenshot. Done. 1, 2, 3 questions. Yes, Monisha. PMT and EMI you can consider as the same perspective. But if it is your EMI, you are paying out of your pocket, it is cash outflow, you will put negative sign. If you are receiving some as annuity, then you will, that will be with positive sign. That means negative sign will not be there. If you are receiving interest payment, coupon payment, that will be what? That is your inflow. And that will also be, if it is regular or monthly payment, you can copy. It's not copying on Excel. No need to copy on Excel, just for the sake of copying, copy and paste on your Word file. That is completely fine, Apurva, right? You all are able to type the question or copy the questions? Yes or no? Anyways, unable to copy. Someone has done it. Manish, I'm telling you how to copy it. Others have copied. If you are not able to copy, just maximize the chat. Take a screenshot of that. Print screen. In your laptop, there will be one option called print screen. Just maximize the chat. Take print screen. Questions will be there. One, two, three questions. Wait. You will scroll up, you'll get the questions. First one is Nisha invested rupees 10 lakh rupees for 10 year at 11%. Or quickly copy it like that, what I'm doing. Wait. Do one thing. Just note down first. Present value 10 lakh rupees. 10 year 10 years. Rate of interest 11%. You need to calculate future value. Next is what? Future value is 10 lakh rupees. Tenure is 5 years. Rate of interest 6%. You need to calculate present value. Third one, 3,50,000 present value. And what he received is future value. This 12 lakh is future value. 7% rate of interest. Calculate the tenure. That means you need to calculate N per. Okay. Here, first one PVFV. This is rate N per. And here, 10 lakh rupees. 8% rate of interest, 5 years, you need to find out the future value. Okay, I hope I have asked everyone to copy. Apurva, then you need to just note down it. There is nothing hard. I have just explained you. You can, rather than writing questions, if you will make a table, just write FV, rate, N per PV. Simple. And question mark. What you need to calculate, put a question mark, then calculate it. Make this table only. That's it. And the screenshot which you have saved, you can go through later and just solve like this. Okay. Fine. I think we have invested most of the time for this. Third one is this calculation FP of single flow. That copying it here. Just note down in a page that PV is this, rate is this, and per is this. You need to calculate FP. Similarly for this. Okay, we'll just write what I have given. This exercise. 10th March. Okay, next class, we can discuss this if anybody is having doubt. Yes, maturity value and future value is the one or the same thing, Suzanne. Okay, or one more question. How many questions I have given? I think 4, then 5, 6, 7, 8. Total 8 questions. 8 are fair enough. You can practice these 8 questions. And these are very simple. Shall we move forward? So what we have done in the same question, we have calculated PV, FV, rate of interest, and NPER. EMT, EMI, we can do with Excel also. No need to worry. If whatever we have learned till that, all the concepts are clear, it is very fine. This one, last one, Abhijit, you can take from the zero, which I had mentioned about the annuity. Have you noticed here in that case? Here, PV of annuity, here I have mentioned end mode. So here you need to put 0. Okay. This end mode. One question was there for end mode. Others you can take beginning mode 1. So for this PV of annuity, you will take 0. And future value is 0. That means this is, he is receiving this much amount. Rate of interest is 9%. How much he need to give today? Lump sum investment so that he can get this much amount. 4 years only. Okay. Now what? I'll quickly move to one more sheet. Stop share. Okay. Only one example of NPV we will do. You all will understand. Not this portion. Okay. Font size is increased. You can read this point. How we are going to do this. Let's say we need to calculate net present value of future cash flows. This is project A. So project A, these amount are in crore. Let's say first year, today you have invested 5,000 crore. Okay. 5,000 crore is invested by a company in project A. First, second, third, fourth, five. These 5 years, these are the cash flow mentioned. That is, the company is going to receive it. This company has invested. This we will receive. So this one, to make it more simple for you, this is outflow and rest all are. Fine. Now we need to calculate NPV. Simple formula is net present value equal to NPV. What is rate of interest? Let's say the discount rate is 10%. So 10% you will select and then you will select all the values from beginning till end. 1 second, huh? From year 1 to year end. Now the value is 1 second. What is okay? I have not taken rate of interest. No, it is fine. So why it has come 5776? Because this is my outflow and I have not utilized that amount. I'll deduct this amount. Now, what is my net present value? Net present value is 776 crore. The same formula is available in PDF. If you want to calculate it, if you want to copy it, you can do it. My screen is visible. I didn't ask. My screen is visible to everyone. Yes or no? Okay, okay. Fine, fine, everyone. Any question which I have left or mistakenly from the chat box unanswered? Any unanswered question? NPV means net present value of all future cash flows which you are going to receive or the company is going to receive. So what we are going to do, only you need to take 2-3 points in consideration. One is you should not start with 0 you will start with and then 5 years. So first 0, what you have invested, that cash outflow, and then cash inflow. We can prepare this table in the, here I had made it vertically. You can make it horizontally also. In horizontal way, or how will you write? You will write cash inflows, outflows. You will drag the discount rate and you can calculate So in a simple way as well. That will be in the form of DCF calculation. Through NPV function also it can be done. Okay. So now a very small example where you are comparing two projects. There are two projects, project A and project B. Both are having discount rate of 10%. This is in crore. So first investment is 400 crore in the beginning, 500 crore in the beginning. First year, it is giving you 325 crore. Same they are giving. Second year, this one is giving higher. But by seeing these amounts, will you say that 200 is less, 325 is higher, so B will be good? On the basis of this, we cannot draw a conclusion. Now, calculate the internal rate of return. Where the internal rate of return is higher in this. How we are going to calculate IRR? Simple formula is IRR. These are the values for this. Guess you can leave 22.17. If you increase the indent up to 2 decimal point, it will be 22.17. Similarly, for this also, you can calculate IRR equal to IRR function. These are the values. 19.43, right? We will do like this. Here, you can increase it. This one below the percentage, you will find increase indent or decrease indent. How much decimal point you want here for 22. 22.17, right? Now, how to calculate NPV? Same way as we have calculated in the previous example. This is the discount rate. These are the values. So here, what I need to do, I should remove this because that was my investment. I need to add this 60.74. You will drag it. Right? So you need for other, if I have some more projects, for each and every project, I need not calculate. I will simply drag it and the formula will be copied. Whatever I have used for the first. How much project is worth? This is utilized to understand which project is feasible for the company. Okay. NPV being greater is better. Yes, Ronak. The net present value of any project is greater. That is definitely a better option for that. Sheet Apurva, we are doing it here only, but yes, I will prepare one random sheet where we have certain examples for each and every parameter, whether it is NPV, IRR, we'll share it with all of you, right? That will be uploaded in your LMS. Gaurav, we cannot say only one, both are required. We take care of the DCF like discount, cash flows, net present value. Then we can take care of internal rate of return also. Okay, let's come back to this PPT point one more time. Here I have added some points. So this we have done, Excel function. These interactive exercises we have done in Excel. Now what quickly coming back to this part where we have just discussed this. I was telling you there is another way by which you can do it, which I have mentioned it in here. I have mentioned it here, which will be shared with all of you through PDF as well. So one way we have done in Excel vertically, this is another cash inflow. You are putting first year, like in 0 year, no inflow, only outflow is there. So what is net? 5,000 only. Here it is inflow. Second year onwards, project has started giving return. So this is my return, but no outflow made, means no further investment. Only we, as a company, we are receiving profit. So 1,700, 1,900 crore, 16, this way up to 5 years. Cash outflow is 0 in these years. Net cash flow, that means this 1,700 minus 0. If you do it, you will simply drag it. For other cell, it will automatically calculate. Now, discount rate 10%, you will drag, that will be applied for each and every. Now what I have done over here, through DCF, discount cash flow, what you have done, here I will show you how we derive this value. So cash flow 1 is what? 1700 divided by 1 plus, this is the rate of interest, 1 plus 10% to the power, this is year 1. So if you do this 1700 divided by 1 plus this 1.1 to the power 1 will give you 1545. Once you drag it, this will become 2 here. So here, this 1900 divided by 1.1 to the power 2. This I have taken 1.1 from 10%, 1 plus R. Here it is 1600 divided by 1.1 to the power 3. Similarly here, 1.1 to the power 4. This is 1500. This is 700. 1.1 to the power 5 will give you this. So once you do this, specific cell selection is there. Automatically, you need not calculate for each and every cell. You will drag it and you will get your answer. What is 776? How do you derive it? You have added all these values for 5 years and deducted this 5,000 out of this. Once you means pull all the values, sum total of all the values will be 5776.97. And what you need to do, you need to deduct 5,000 out of it to get net present. That's a simple. I hope all of you have understood about this point. Yes, Ayush, PDF is already shared with the team. They will upload it. I thought they have uploaded it in LMS, but I'll send a reminder to them also to upload it. This complete sheet is available over there. You can copy the data from here and put it into the Excel. For Monday to Friday, you can practice these questions. Any kind of doubt is there, we can discuss the doubt in the next session also, right? So don't worry. This is only the first session for beginners. It might be difficult, but it's if you practice, it will become easy. Okay. Now, similarly with this, what I have done. Okay. For NPV, points are also mentioned what exactly NPV is. Value of all future cash flows means inflows and outflows, what we have done in the example over the entire life of investment, which is discounted to present. What we were doing, cash flow 1 plus rate of interest to the power number of years. So then we were adding cash flow 2, cash flow 3 till the investment and discounting. This is the rate of interest at which we are discounting to present. Where it is used in capital budgeting to analyze whether the project or investment is profitable or not. If it is profitable, we'll invest, else not. It is used for financial analysis and financial modeling when determining the value of investment. Since this is the base of financial modeling, like discounted cash flow, you all are aware. So base derives from here only, from the TVM concept. Okay, by discounting the cash flows, we are actually calculating net present value of a business. Okay, so this is what we had discussed about NPV. This exercise we have done. Solution is also shared. Then IRR. What exactly IRR is? Expected compounded annual rate of return. It could be for any investment, it could be for any projects. As we discussed, a small example related to a project. For investment also, we can calculate it. As some of you were saying, how we are going to calculate if the amount is different. So for 1 year, if you have invested X amount, you can put outflow as that amount. Next year, if it is less, you will put, if you start receiving some dividend amount, if you have sold out certain units, you will use at cash inflows on certain date. You can calculate IR. If you know the specific date, we can use XIR. That we'll discuss in next session also. That is not a problem. So higher the IRR, the better the project is. If there are 3 to 4 projects out of which we need to select one, we will probably select the project which is having higher internal rate of return, means that is more profitable for us. If it is investment, we are calculating based on the cash flows. Let's say one investment vehicle is going to give me 12% return, another is 11, then 9%. So obviously we are going to choose one over other, which is having higher IRR. Fine. Okay, what is once we try to explain internal rate of return, it is that discount rate at which NPV of net present value of investment becomes zero. That means it should not be negative. If it is negative, that means that project is not feasible, not viable. Okay, alternatives we are searching which one is better. So for that, it should always be zero or positive. This exercise, you can calculate this on Excel if you want to take a screenshot. Although this will be shared with each one of you PDF format. So no need to write down, but still if you want to click it, you can. So let's say this is the project year, you know, in which year, how much is the cash outflow, how much they are going to receive. You can simply calculate IRR. So what is the function you need to write in Excel? IRR. Let's say this is A, B, and this is so 1, 2, 3, 4. I'm simplifying it so that it should be easy for you to understand. Let's say this one is B. So this one is B2. B2 is to B7. And click enter. You will get the IRR. Fine. Okay, I'm checking. Did I miss anything? Yes. This you can easily portray. Like from the previous example, once you are done with the Excel, we will gradually learn this. Not required right now. It is very easy to plot. This is just a simple graph. You will put the value in Excel. It will be automatically created. And you can made certain modification out of it. Okay. This we have done. This is what we have just discussed. The answer is also provided in the PDF sheet. So you can cross-check your answer also. The questions which are included, the next sheet includes the answers as well. And if any point of time there is any confusion, you can raise a ticket to me and you can connect me in the next session also. I will give you the solution of the problem. These are the few terms and things which are mentioned over there in the sheet. What are the terms? What exactly that means? Anybody who is having any doubt, any questions? Any questions, any doubt till now, whatever we have discussed? Rule 72 is a simple rule which states that how long will it take to double my money? I will just quickly explain. Yes, Apurva, it will be shared. Just a minute. I'll just open the Excel sheet and share it with you. Screen share. Okay, so what was that? If I know 1 lakh, first we'll do with Excel sheet. This is my present value and I want it to get doubled. I know the rate of interest where I'm investing is giving me 8% of return. Effectively, what I want to know, how long will it take? That means I want to calculate N per. This is negative. Okay. And this what second rule says? Second is rule 72. So 72 divided by rate of interest will give me okay, it is percentage. So here only I'm giving you why it is not coming. Equal to sign is missing. 9, okay? It is 9 years. I don't know what is happening over there. I'll just quickly correct it, okay? Fine. Now talking about this Excel function, and per rate is 8%, PMT is 0. If we are doing it through Excel, PV is this, FV is this, investment is made in the beginning, 9.0064. And here also we are getting 9. You can take any example. You can easily get what it is. Let me do it correctly. What the mistake I was making. So 72 divided by rate of interest. So 0.08. Simply 8 write down. Yes. Rather than writing percentage, you can take it numeric. So 9.0064. One or the same thing. Any link is there, so can learn. Manish and other. No, link is not there, but the total recording will be uploaded over there. Okay, and PDF will also be shared, right? So whosoever has asked about this double the money 72 concept, you can compare it with the Excel formula and this. There will be very, very minute variation. Minute variation will be up to 2 decimal point or there. So I think they just asked, okay, fine. I hope points are clear. Cash outflows, yes, always negative RN. Let me quickly share this once again. Okay, fine. That was all for today. We had discussed about basics about PV, PMT function. You can easily calculate anything which comes in one question, whether it is calculation related to PV, whether it is FV, rate functions, NPER, and NPER, the last pages, which is about the quarterly, monthly, which also can be done. You need to synchronize the tenure and the rate of interest. Yes, first module is done. We are done with the basics of finance module. Next, we can discuss mutual fund, or if you are interested, then we can discuss fixed income securities as well. So maybe we'll discuss about fixed income security first, and then we'll discuss about mutual funds. Okay. So this module is done. We have completed the first module. If any query, any doubt is there, we can take certain question in the next session also. Right? Okay, everyone. That's all for today. Thank you. Thank you, everyone. Yes, yes, you all will get PDF. No issues. Okay, thank you. I'm ending the session. Thank you.